piece we hadn't seen before in Bitcoin was proof of work. But the magic, I think, comes from the fact that there is no central operator. All transactions are public. All the transaction rules are public. Anybody can enforce transaction rules. Like that was kind of where the magic was. And so we kind of took it apart. And the use case that we decided to target in the early days was payments. Payments are a multi-trillion-dollar problem. And it seems like cryptocurrencies are just naturally suited to make payments better. And it's specifically, we kind of focused on cross-border international payments, not because domestic payments are great, but because it's cross-border payments are the worst. Like if you, anyone who's made an international payment probably has stories of bad experiences. And so the worse the thing you start with, the less amazing you have to be better. And I think we can eventually be amazing and sort of take over the payments world, but we're not going to be there day one. And so if we can't succeed against the worst part of the problem, why are we bothering?
What is up, XRP community? Welcome back to another video. Thank you for joining me. Ripple XRP supply on exchanges dropping to a 7-month low. Price fails to react. Why is this bullish? Because people can only buy XRP if it's on the exchanges. When it's not on the exchanges, it's typically in people's cold storage wallets, like a Ledger wallet or something. And that's how you protect your wallet, protect your crypto, and not try and sell. If you have it on an exchange, you can get hacked, you can get claimed by the exchange, you can lose your account. So whenever exchange supply is very, very low, it's more bullish for the spot market of XRP. Some general stuff is very important. Japan's largest electricity company, Tokyo Electric Power, to use renewable energy to mine Bitcoin, and $700 billion asset manager, Bernstein, says if Donald Trump is re-elected president, Bitcoin may reach up to 90,000%. Politicians often lie. However, Donald Trump has allegedly claimed he will make the USA the capital crypto of the planet. So Bitcoin could easily surpass $90. XRP could easily surpass $1 to $10. Furthermore, Donald Trump's also speaking at the Bitcoin 2024 conference. And look at this right here. Look what BlackRock is doing to get their Bitcoin. He says, we all knew it. BlackRock settles with Coinbase off-chain and is opaque. Settling with Coinbase as in they're buying their Bitcoin from Coinbase, but not on the blockchain. This was sought for by the SEC by the in-cash method, a total scam. Hence, the price is not affected even though they are buying all the Bitcoin, right? They're buying hundreds of millions of Bitcoin every single week, and that would do wonders for the Bitcoin price. But when you buy it over the counter directly from Coinbase, you're not really affecting the price. So they're getting all this Bitcoin and they're not striking the price up because they don't want the price to be 100K yet because they're trying to accumulate. And look at why they're doing that. You read it right. BlackRock has been settling its BTC transactions with Coinbase without using Bitcoin's settlement network. We're not talking about buying a coffee. We're talking about institutional settlements of an $18.5 billion fund. And why? Transaction speeds and fees. I think I know something that helps with that. Really quick, guys, if you want to support the channel, the best way is to hit the like button. It's free and it gives me some feedback, lets me know I did not waste your time and you enjoyed the content. If you dislike it, press dislike, but thank you in advance for all the support on the channel. Here you can see a chart of Bitcoin, and it shows how there's a part one of the bull run and also a part two. A lot of people think we're in bull run part one right now, and we're seeing a correction down the Bitcoin's resistance levels. But just keep in mind, the bull run is going to go into 2025 and sometime in 2026. We're just getting started. You're not late. Congratulations. You have survived one of the largest capitulation events. Here you can see Bitcoin selling. And for the entirety of Bitcoin's price, you've never seen this much selling and this long of selling. I'll tell you the reason why, because this is the first time for all cryptos, for XRP, for Solana, for Ethereum. It's the first time they've experienced a downturn in the general economy. Bitcoin came out coincidentally right after the last financial crisis that we did not fix, by the way. We just put a band-aid on a leaking Hoover Dam. And then 2 years later, after 2008 financial crisis, oh, this new magic internet money, Bitcoin, created by some random guy who has $6 billion, Satoshi, and he's never sold any. And Bitcoin has never had this much selling, and it's because it's never had a recession in the real market, which we're kind of in a recession right now. And this is a shocking graph right now. A lot of you may own homes. My generation, young people wanting to buy homes, it's very hard. Because in 1972, they took the dollar off the gold standard. Corporate earnings kept going up, but wages did not follow that. And you can see right now, it's 8 times the price of an income to get a house. Absolutely absurd. This is an interesting chart showing the crypto owners as a percent of the population. I found it a bit interesting. Vietnam's 21%, Ukraine's 10%, India 6%, China 6%. You got to think about India and China together. They comprise 40% of the world population. They're not even at double-digit percent owners of the population. So like I said earlier, you're still really early. If you guys need a spot to get XRP or Flare, check out Uphold. It's in the video description below. It's where I get my cryptocurrency daily, and it also supports the channel, so thank you for that. In order to perfectly navigate your investment decisions, I'm not a financial advisor, but this is just how I operate. You need to know what's going on in the global economy, because if the macro economy wets the bed, crypto will wet the bed. And now I want to leave you with this clip right here where he's breaking all of this information down at a level much better than me. If you guys made it this far in the video, comment a bubble. When you watch the full video, it's the best way to support. So thank you in advance for giving me some of your day. Comment bubble so I know who all the loyal viewers are.
When the yield curve is inverted, it gradually chips away at the economy, making it more and more vulnerable to an outside shock that could trigger an economic downturn. Throughout history, each shock that triggered a recession was different, but the common denominator is that these recession shocks always seem to happen when the yield curve is inverted, and the US economy enters a slowdown every time. But today, despite the yield curve having been inverted for a record amount of time, and many signs that the economy is currently experiencing underlying weakness, we still haven't seen any big shock that can finally trigger a recession. For the most part, the economy has actually been holding up quite well despite the inverted yield curve. And this has led to one of the most expensive stock markets in history, more expensive than in 1929 and almost as expensive as 1999, two dates that were followed by quite extreme market crashes. But it's not just the stock market that's expensive today. The housing market is also at one of the most expensive levels of recent financial history. The ratio between the price of homes in the US and household income is now at 7.7. We've never seen such an expensive housing market throughout financial history. It makes housing around 2 times more expensive than what it was during this 40-year period between the 1960s and 2000. All of this puts the Federal Reserve, the US central bank, in a major dilemma today. On the one hand, if they begin to cut interest rates, they risk seeing major asset bubbles form in the stock and housing markets, if that's not what we already have today. Ever since the Federal Reserve announced that they were pausing interest rates in October of 23, the S&P 500 has surged by 40% within 9 months, which is again a speed of ascension that we've rarely seen throughout history, except in a few very famous instances. So if the Federal Reserve decides to cut interest rates throughout 2024, they risk seeing a euphoric bubble form on the stock market, but also on the housing market. And we all know what happens when bubbles pop. On the other hand, if the Federal Reserve doesn't cut interest rates soon, they could be creating a very severe recession when the economy finally breaks. After the 2008 financial crisis, Ben Bernanke, the chair of the Federal Reserve at the time, said that in hindsight, they should have cut interest rates sooner. That's why the Federal Reserve, that currently has the highest interest rate since the 2008 financial crisis, is very likely to cut interest rates throughout 2024. And you can see financial markets are already pricing that in. The 2-year yield that you see on this chart is a reflection of what the market thinks the Fed is going to do. And you can see quite often you see the 2-year yield falling before the Federal Reserve actually cuts interest rates. That's exactly what's happening right now. And we can see what happens to the stock market every time that the 2-year yield is falling like today. It has created significant market rallies throughout 2023 and 2024. And the very opposite was true throughout 2022 when the 2-year yield was rising and the stock market was falling as a result. So with the 2-year yield falling today, pricing in that the Federal Reserve is going to cut interest rates, does that mean that the mega stock market bubble scenario is right in front of us? which could lead the market to absolutely crazy valuations? In order to answer that, we need to look at this chart right here. This is an index called the MOVE Index, and it shows us the volatility of interest rates over time. So in other words, how much uncertainty there is in the bond market. You can see, for example, this was during the 2008 financial crisis, lots of uncertainty. This was during the COVID pandemic, lots of uncertainty. And this was during 2022 when you had inflation, oil shocks, and the Federal Reserve was raising interest rates. The combination of these factors led to the highest uncertainty in the bond market since the global financial crisis. And we can see that this index is actually still quite elevated today compared to, for example, before the pandemic. Now, when we flip this indicator around and we add the chart of S&P 500 valuations, they're pretty much a mirror image of each other. This is a chart that we've shown before, and it shows us exactly why the stock market could actually be heading into much crazier valuations. That's because every time that uncertainty in the bond market goes in this direction, we see the valuations of the stock market go up. And of course, the very opposite is true when bond market uncertainty goes in this direction. And so what this chart tells us is that if bond market uncertainty were to make this type of move, the valuations of the S&P 500 will likely be heading in the same direction. And by the way, this has been our thesis since late 2023 and why we expected that stocks could surprise everybody to the upside despite these high valuations. But at one point, the MOVE index is going to turn around. And as that happens, stock market valuations will also turn around. When the recession that we talked about earlier in this video finally occurs, this is something that we would expect to happen, similar to how the 2008 financial crisis triggered a lot of bond market uncertainty and declining stock market valuations. And that's where exorbitant market valuations on the S&P 500 puts the stock market at risk of a much larger correction when things do turn around.
In just breaking news today, Michael Saylor, CEO of MicroStrategy, one of the largest Bitcoin holders in the whole entire space, super bullish, saying on CNBC, Bitcoin is going to $13 million.
Let's take a look at crypto prices this morning. You can see 55,000 now. Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that. But it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, You can't do that as an individual, but MicroStrategy can do it.
What have you made right now? I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious, sir, what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing and it's created more demand, but you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1 and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this, though? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Is it a non-correlated asset people can count on, or is it just a risk-on?
You know, in the near term, whoever's got the most money can decide whether it correlates or non-correlates. It's like, again, I can lever it up 20 to 1 on Saturday night, and I can trade it long or short.
Hey, Michael, just the whole idea of leverage in something that is admittedly so volatile causes some people some real concern. I mean, I'm far more conservative. I would be worried about that. What's the worst case scenario of something that would happen in a leverage situation like that with the Bitcoin ETF?
I think what happens is people offshore trading on Binance with 20 to 1 leverage get wiped out on Saturday night when there's a potential missile scare. And so they're the degenerate crypto traders. Mm-hmm. On the other hand, what you want is a free, open capital market. Everybody can trade it any way they want. And so if you're going to hold it for more than 4 years, you're going to get superior performance with that volatility.
Gensler, with all we've seen, and I wonder what you think. Do you have anecdotal evidence exactly what he's thinking in terms of Bitcoin regulation, given that do you think he's done the 100 hours that you said need to be done to understand it? And if so, what do you attribute I don't know, he's been unable to stop it because of the courts, really, but he certainly tried. What do you attribute that to?
You know, I think this administration's been fairly conservative in their embrace of the crypto economy.
Right.
They want to go slow, carefully, deliberately.
But do they want to go, or do they not want to go?
Well, before Gensler entered office, the rhetoric was even more controversial. After Gensler entered office, you heard Jerome Powell, Christina Lagarde, Gary Gensler all say Bitcoin is a speculative digital asset. And that was actually a move forward. With the approval of the ETFs, it was a second move forward. I think clearly we're all waiting for big banks, bulge bracket banks, to start to custody and hold Bitcoin. That'll be the third big shoe to drop.
Do you think that the election matters, and do you believe that Donald Trump is more Bitcoin friendly than like a Biden and Harris?
Well, there's no doubt the Republicans have taken a very pro-crypto stance.
Republicans or Trump?
Well, Trump.
And you believe him? You don't believe he's just
in particular.
Yeah.
There's a tension between the 21st century and the 20th century. In the 20th century, company comes public. It cost $100 million in 4 years to go public. I know, I did it in '98. In the 21st century, I can create a public crypto token in 4 hours for $100. So you have 100 million companies that want to be publicly trading an asset 1 million times cheaper, faster. That's the crypto economy. The traditional economy is you take 4 years, you spend $20 million a year on compliance. And I think that the two sides are talking past each other. But clearly, the future is faster, smarter, stronger.
I mean, you know what Senator Elizabeth Warren thinks about Bitcoin. I mean, if she becomes I've seen her, big jobs.
The political winds have shifted, and I would say that, at this point, the Republicans have shifted to way progressive, and the Democrats are drifting to the middle.
In terms of Bitcoin.
In terms of their view toward crypto and Bitcoin.
And let's say that it is a continuation of the Biden-Harris administration. Does Gensler take on a larger role? It becomes even more difficult?
That's all above my pay grade. What I would say is, my view is...
Would be Treasury Secretary? I mean...
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
For anyone, buy it and hold it for more than 4 years. And then you think eventually it takes how much, let's say it is digital gold, what percentage of gold's market cap does it finally?
Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%?
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million, but what is it 5 years from now? In your 4-year calculus?
It's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25, and at some point it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8% because it's always going to be a more global, open, free capital market.
How is there stuff that's above your pay grade? You're worth billions. I mean, we can say that. It's above our pay grade, but who gets to decide if it's above your pay grade?
He might have been it's below his pay grade.
Right, exactly.
Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company,